Hey guys, it's August 20th, and I'm super excited to share with you what happened yesterday, Wednesday, on the pre-market and US open market on both gold and on oil. Now, for those of you guys who follow my other videos, I do have a trade video on gold and me actually personally taking a trade on gold. And on the news on oil, I'm going to review with you guys the setup prior to news, and we'll go into detail on that real quick. Just a quick snapshot though on oil. It was literally a 150 to 200 tick move. So off of one contract, that's $1,500 to $2,000 that you could have made off of one contract on oil. On gold, we had about 100 to 150 tick move. Again, that would have been $1,500 just on gold. Let me go ahead and zoom in, and we'll talk about gold real quick because this was the trade that took place first. And it's all before U.S. market open hours, okay? So before I move to the right, this was the initial setup. So what I always talk about is you have a sideways range, and the longer the sideways range, when it finally breaks out of there, there is a huge move, okay? So the first opportunity on gold was after this sideways range. So let me show you guys real quick over here. Okay, so this was pre-market. Had a sideways range. Finally breaks out of there, right? Comes down, hits that high value area or near it, right? So finally breaks out of there. Let me zoom in real quick. Here's your high value area right here. And actually doesn't retrace there that close. So it could have been a missed opportunity because that was literally about a tick or two. Because actually once it breaks out of there, comes back down to about this 17.7. Your high value area was here down at the 17.5. So there's potential for you to have missed that. But look what happens once it breaks out of there. And it does come back down to retrace. You have this huge move here, right? 10, 20, 30, 40, 50 ticks. So that would have been a $500 move off of this explosion, right? Well, at that point, you just sit on your hands if you just want to go long, because the opportunity does come. And this was a great part about this. Well, what do you do in this kind of a situation? You see this huge moving average, right? That's moving up, this uptrend, very strong, right? It's literally vertical, okay? See it sideways, it kind of moves up and down and just stays sideways. Well, look at this vertical move off of there, okay? That's a very strong push up. Now eventually starts going sideways again and then breaks down, right? And then pre-market, US market tries to break out of there, right? That high value area, doesn't hold, comes straight back down, and then the next couple bars ends up coming down really hard, right? Well, if you're a buyer and you're waiting, all you had to do was for this thing to come back down, as we talk about in many of the other videos, to that low value area. If I go to a 5-minute bar, all this was a continuation of that initial move. Go to a 5-minute bar. Look at that high value area right here. This is a sideways movement that has the highest high value area right before it broke out. So if you missed this move, look at that high value area, right? Actually, on the 5-minute, came up, came back down and retested the high value area. So you could have actually got in here at the 118.1. Right? Or 118.1, yeah. So we mark that, and look what happens. Soon as it finally comes back down on US market after this long uptrend, buy right here. Buy and hold, because once this thing breaks, it's going to at least come up to this level here. But once it breaks here, then it just could have potential to move up, and it did. And the reason why I looked at that was because I zoomed out and I said, what was our recent high? This last week, this is our recent high area right here. You know, your high value area between the 11.24 and 11.25, and I was gonna hold at least up to there, and I did. And then I had some runners up and that hit up the 27.28 level, and I did not hold all the way to 11.34, but I was able to at least make this massive move up here. But the main thing was, you have a move like that, it goes up against you, and then shoots up in line with the US market and the momentum and volume that kind of comes with that. So that was an amazing trade right there. Potential profit targets here at the 25, and then above here I knew that if it broke here, depending on how it broke, and look how it broke. Look at this bar right here. When it finally broke to 25 right here, look at that. It shot up way above 25 and it held above 25. That's very bullish to me. At that point, if you missed that move, I mean, I had runners so I left it, but if you would have missed that move all the way up to 28, 29, I got out here. It came back down to the 25 area again, held, and that could have been your next buy level. Because you look at the next value areas to your left. Once it broke above the 25, there really wasn't anything within this day, right? So you look to your left, where are your high value areas? Right here. The 24.7 and 25, which it just broke, right? That was your high value areas. Look what happened. Came, broke above it, came down, retested the 25, 24.7 area. Look at that. That could have been your buy right there. If you would have bought there, you would have made another almost 100 ticks off of that. Just off of that move. So that's really the power of a market when it's trending in one direction and really explodes. And gold does that. Now the reason why I want to show you in context real quick why I thought this could go even higher than that. Now I'll zoom out to a 4 hour. Take off my studies. Remember back in July when it finally had this down move right here? This huge down bar. And I said that the market's just going to keep going down. And it did. Well, eventually it held within here, within this range. And what I say, if it ranges in a direction for a long period of time and finally breaks out, it didn't break out to the bottom, right? You had the lows here, but didn't hold and maintain it. That was your reference point, right? So if this was your range, if this was your bottom of your range, you needed for it to break below here. It did not. What does it do? After sideways movement, right? Breaks to the upside. What does it do after it breaks? Comes back down, retests it, shoots up, right? Hits within this red bar right here, within that range, right here, right? Comes back down, and then this middle part, look, there really isn't a whole lot of resistance or support here, right? So anything could have happened. But instead of holding in this zone, it actually comes back up and then stays with, oh, let me not zoom in here, stays within this zone right here, right? Right here. After it comes back up, comes back down in this zone, and look what happened. Pre-market broke that, came back down, retested it. Even within this context, if you traded this way, you would be able to see that if it comes back up, retests it, potential to move up. And where would be the potential? Because once you break this area here, which was a recent high, there really isn't a whole lot of resistance, right? Look, there is no consolidation zone like here. When you talk about this move right here, all the way up to the 1140s at least. This thing just crashed down like crazy. So if it goes up against it, you're going to have no resistance as it comes up if it really wants to push up. That's why you saw this move up so quickly and then consolidate. And once we broke out of there, and I said, you know, once you break that 25 and see how hard it breaks up, there's potential for this thing to move up because there really isn't a whole lot of resistance. The next area that we looked at for targets was right here. At least to 31, and then down at least to 36. And we almost made that yesterday. So this kind of thing that it could help you out with the context of once you do kind of have a move, and why I decided to stay in the move, right, and let the profit and let the runners just run and make a lot of money. And sometimes that's the hardest thing to do is, letting a winner keep going. We let losers keep going a lot of times because we don't want to be wrong. But most of us have a very hard time letting the winners just keep going because you want to lock in profits. You want to make money as it goes up because you don't want it to go against you. But in days like this is when you lock in some of your profits, but then the rest you just let really just take off. And that was a huge day off of gold. Let's go to oil real quick. Oil, context, Wednesday, crude oil inventories that happen every week. This was a setup prior to the news. And this is what I talk about. If you see a setup before news, take it. It's no different than taking it without news because you still have the same risk that you're going to apply to every trade entry. And I'll talk about, and I'm going to show you in just a second. The same thing happened with oil. Had a sideways movement, right? Broke out, came back in, broke down, came back in, finally broke down where? Look at that, this red bar here, right? So if you had your profile levels, this was really your strongest profile on the low value area side, right? Right? So in a downtrend, you're looking for a breakout to the downside, come back up, retest the low value area, and then short, right? Just like on oil. Let me turn the study back on. Except for it's the opposite. You're looking for a high value area break, right? So in this case, right here, here's your high value area, sideways movement, broke out of that high value area, came down, retested, went up. Came back down and retested it, went up. Oil, low value area, because you're looking for this thing to break. Once it does break, when it broke to the downside, finally breaks hard. What does it do? Retest that low value area, down, right? So here was, before the news even comes out, this is what you're looking at right here. This is what you're looking at. Market's moving up and down, all right? Finally breaks hard to the downside, right? And then all you're looking for is a setup. Comes back up, 4828. If you shorted here, 13 tick stop, 10, 1, 2, 3. At the 42.93, we zoom out, never even hit it. You had plenty of room if you would have shorted right here and held before the news came out. News comes out when? 10:30. Look at that, 10:30 move. Explodes to the downside. And you had plenty of room, because this is before news, okay? So, granted, if you wanted to take profit, 10, 20, up to 30 ticks prior to the move, and then it comes up against you and you were scared, even though you got in here and you had plenty of room, you weren't losing money before the news came out. You could have held that and made a 200 tick move all the way down. And once this thing explodes to the downside off of the news, never looks back. Look at that. Never looks back. Finally does retest and come back up, then shoots back down again after that. At this point, this is the end of the day. You're not sure what's going to happen. But if you would have held all day, you would have made a massive amount of money just on oil. But the main point here is the same setup, no different from any other day. Before news inventories come out, setup happened. You could have shorted it right there. And that's when you could have made your money. And this is when you make money that really counts, that really makes up for any losses that you've made, or really makes your account move in the positive territory. Some people would have made like their annual salary today, depending on how many contracts you took. So just imagine that one contract, $2,000, 10 contracts, $20,000, just off of oil. And look at the risk. Same risk that you normally take off of any other trade that I talk about every day. This is oil and gold gold and oil futures that we look at every day. So I hope you guys are able to take away something from this. Again, the main points are same setups, you're looking for a break of low value or break above high value area, come back down to retest it, or if it breaks below low value area, right, comes back up to retest it and then sell. Breaks above it, buy. The small little move would have been okay too, buy, but really this one was the one that we were looking for, and look at that huge potential, right? Gold, oil, look at that. Hopefully you're excited as I am. Continue to learn, look at the patterns, and make a lot of money in the market, guys. This is Market Profile, Trading Market Profile. I'm Joe. If you have questions, email, comment, let me know. And watch the videos, keep learning, and let's make some money together. Alright, everyone have a good day. I'll talk to you guys tonight. Thursday and Friday, we got 2 more days in this trading week. Don't worry. Plenty of opportunities in the market. We have an abundant amount of opportunities in the market. Okay, this will happen again, and it happens every day. Not to this extent, but it will happen. Alright? So, let's get studying, let's get trading, and let's make a lot of money together. Alright, have a good day, guys.